Turning to tax tips, the IRS is making changes to tax brackets and tax breaks in 2024 to adjust for inflation. Single people who used to be able to take deductions of $13,350 will now be able to take tax breaks up to $14,600 next year. For married couples, the taxpayer break moves from $27,700 to $29,200. The lowest tax bracket will be $16,500, and the people who earn $609,350 will be in the highest tax bracket. For more, we are turning to John Bever, the president of Phase 3 Advisory Services. John, so much to know. What can you tell us about all of these changes?
So what's going on is that we're going to have a sunset in a couple of years of the Tax Cut and Jobs Act. That was actually tax reduction for most people. So we're going to see that law sunset. We're going to go back to the previous rules. When does this happen? The law sunsets in 2025. The old rules kick back in 2026. So there's only 3 years left to do some important tax planning. One of the things that's going to happen is brackets are going to increase. So if you have any intention to do a Roth conversion, you might want to do that in the next couple of years. Of course, this does depend on your lifetime tax bracket. But if you were thinking of doing this in 2026 or 2027, you might want to look at 2025 or 2024 to get that conversion done when the brackets are a little bit lower. If you're retired and thinking about doing Roth conversions, also consider the effect that that will have on your Medicare premium, because above a certain threshold of income, your premiums increase. This is what's called IRMAA, I-R-M-A-A. There's also an effect on your Social Security income and how it is taxed. So it's complicated rules here. Make sure you meet with your advisor to find out what would be best for you.
Thank you for sharing your expertise on our show, John.
You're welcome.
Go to businessfirstam.com for where to see our show on TV.